Good afternoon. Thank you for joining me for another office hours training. I am Crystal L. Gunn, your financial strategist, small business advisor. Part of my job as a strategist, be it on the business side or the personal side, is to help you create a solid financial foundation, a strong business base for which you can grow. I also help you to have some aha moments, those self-discovery moments, and helping you see what no longer serves you so that you can release it and soar. All of that helps with those breakthroughs. That's where you start to shift. That's where the magic happens, be it in your personal finances or your overall business. And it's Tuesday, so let's talk credit. And last week, because June is home ownership month, I started talking about credit mistakes that people make when buying a home. It can be a very daunting and stressful situation. The earlier you start to prepare and know what's coming, then the process is a whole lot easier, right? And so when you apply for a mortgage, basic guidelines include income, debt to income ratio, and credit score. You must meet a minimum credit score. That's the first requirement for that mortgage product. And then different products and different lenders will have different minimum credit score requirements, but that credit score requirement is the first hurdle, right? That's the first hurdle to qualifying for a program, for a lending program. And after that, there are other guidelines, but that first score, that middle score of all three of your credit scores, that's that first hurdle. And there are mistakes that people make with their credit when they want to buy a home. Probably remember me saying that I used to, a few years ago, I originated mortgage loans. Still did all of this stuff, but I also originated mortgage loans. And then back in the day, I had, with my husband, I had my own, we had our own and another partner, a mortgage firm, right? And so we used to see these things all of the time, right? And you could tell people, don't do this while they're in this mortgage process. And it never fails. Someone will do something that costs them the deal, like from going to get a new car. And now that car payment is, a couple $100s more than the previous car payment, and it knocks their debt to income ratio out of whack. So going through these things and understanding some things that you don't want to do during this process is going to be really, really beneficial. And again, you want to start looking at your credit as early as you can, not, oh, my lease is up in 2 months and I need to move. So now you start looking at it. If you know there's a possibility, the earlier you start to look at your credit, even if you think that your credit is okay, even if you have good credit scores, you still want to take a look because debt to income ratio and other things also play a part. All right. So last week I talked about, I think it was 3 things that you don't want to do when you're applying for a mortgage or getting ready to apply. These are things that you don't necessarily want to do in general, but you really don't want to do them do these things when preparing to get a mortgage. The first one, missing payments, right? Late or missed payments can significantly lower your credit score and negatively impact the chances of you getting a mortgage. Now, some mortgage loan guidelines will only allow 2 or 3 30-day late payments in the previous 12 months. So they're taking a 12-month look back. How many times have you been late? And I'm talking 30-day lates, right? And so when I was writing mortgage loans, I had clients over the years who had to wait some months, even though their credit score was sufficient, but they were still in that 12-month window or 24-month window. They exceeded the number of allowable 30-day lates. So they had to wait until the time frame lapsed that within the previous 12 or 24 months they didn't have, again, the max number of late. So I always suggest, whether you're getting a mortgage or not, use your online banking bill payment system to send your credit payments from your bank to the account of the creditor by the due date so that you never miss a payment. I'm not a fan of creditors coming into your account to take the payment, but I'm a huge fan of you setting up your bill pay from your bank to send that payment to your creditor by the due date so that you never, ever, ever miss a payment. Life happens, you go on vacation, someone gets sick, we forget dates and things. So this will cover you to make sure that you keep your payments current. The second mistake people make, maxing out credit cards, right? So high utilization can lower your credit score and suggest to lenders that you may be overextended financially, right? So the closer your balance gets to the credit limit, the more of a hit you take on your credit score. So if you're looking to buy, try to pay down your credit card balances to below 30% of the limit. So not the collective. So if you got 3 credit cards, not the collective, you're not adding them all together. Each individual credit card, you want to make sure that the balance is under 30% of the limit. I'm by no means suggesting, I'm not a fan of carrying balances, but if you are maxed out, close to maxed out, look at reducing those balances. You may not necessarily need to pay them off, right? So let's say you have 3 credit cards and they're all maxed or close to being maxed out. Pay the balance down first and not off. Pay the balance down to be less than 30% of the limit, and pay the cards that take the least amount of money to pay down. For example, say your limit is $300. Say your limit is $300 and it's maxed. That card will take a whole lot less money to pay down to 30% of the limit than the $3,000 limit card that's maxed, right? So you want to take that, pay down that $300 limit. If the second card is $500, pay that one down, right? And then attack the larger one. And then after that, continue to pay the larger one down, right? Don't pay them off. Just paying them down could get you a score where it needs to be. And then again, you're not maxed out on all of them so that they're, credit. Because I've also seen people getting a mortgage and the lender requiring them to pay off some credit card debt. And not necessarily because they're because the debt to income ratio is out of line, but mostly because they got all these credit cards and these credit cards are all maxed out. And so not only could they suggest that you pay some of them off, then they will also suggest that you close them as well, right? So pay those credit card balances down to below 30% of the limit. Start with the credit cards that take the least amount of money to pay down first. Pay them down before you start to pay them off, okay? The third mistake, closing credit accounts. Closing old accounts can reduce, or even new accounts. And let's say, you paid this credit card off and you think, well, now you're just going to close it. Leave it open. If you pay it off, just still leave it open, because closing accounts can reduce your available credit and increase your overall credit utilization ratio, which can hurt your credit score. Plus, just the act of closing the accounts can reduce the score as well. Instead, again, pay down the credit card balances if you can't pay them off, but don't close them. The biggest thing that I can say, and I repeat this over and over and over again, is don't wait until you need your credit to take a look at it, right? Start to fix it today. Fix it and then practice good management going forward. The earlier you in this process, again, if you say, you know what, I just signed a lease. So now you got 12 months, but you don't want to sign a lease again. After this 12 months or 6 months or however long you got left on your lease, that you want to buy a house. Call your lender today, right? Call the lender today. If you have a realtor that you would like to use, call them and ask them who they suggest, right? I never let my clients or people who attend my workshops just walk in blind. Go see this person, right? But go see them, let them pull your credit, let them see what it looks like, talk things through so that you know exactly what it is that you need to do if you're in good shape, whatever, so that when it's time, when it's time for you to start looking, when it's close to your lease getting up, you're then not scrambling around trying to pay off some debt because your debt to income ratio is higher, or get somebody to try to repair your credit and do all of that stuff. You've already started that process. And when it's time, you're ready. What's the saying? If you're already ready, you don't have to get ready, right? So, what is my favorite thing for today? Credit checkup. So, part of this credit checkup, or one of the things that I do for clients, and realtors send me people, and mortgage loan officers send me people as well, is we do a credit checkup, but we also can create strategy. We can look at where you need to be credit wise, where you need to be debt to income ratio wise. And because sometimes people will think, well, I need to pay this off or I need to pay this down, because you don't know and you don't know guidelines. And you may find a loan officer that will tell you all of that, right? I was one of those loan officers, and I would have people say, Crystal, you told me more than the last 3 loan officers that I spoke to altogether. And I would always have to not necessarily come to their defense, but explain the process. A mortgage loan officer's job is to approve or deny you on that mortgage loan. And if you're approved, get you through the process. Their job is not to tell you what to do. Their job is not to give you that information. Not because the lenders are trying to be mean, but it can blow back, right? It can, well, they told me to do this and now I still didn't get approval, right? So that is not their job. You have housing counseling agencies that will help you. You have other nonprofits that will help you. My nonprofit, United Community Solutions, we do free workshops all the time on these things. On the personal side, that I do the coaching, um, these credit checks, and creating strategy for individuals. So don't wait until it's too late. If you call, you may get a loan officer that will tell you all of that information, but you may not. And so I just don't want you to be offended and think that it's not a good loan officer if they don't go down the road and give you step-by-step strategy on what you need to do to get ready. Because again, that is not what their job is. So the link for a credit check is in the description. Also, you can use that same link if you want to talk strategy, if you know you're not where you need to be and we can look at some strategy. Just make sure you put that when you schedule, make sure you put that information in when it asks, what do I need to know? That way I can have the information, the worksheets or whatever prepared and ready for when we do that check. So again, that information is in the description, right? So even getting ready for a mortgage loan, I always talk about anything relating to your finances is a journey. Even getting ready to purchase a home, it is a journey. There are steps that you need to take, right? And again, as I said in the beginning, the more you do up front and the more you know up front, the easier the process will be. It can be nerve-wracking, right? But if you have things set up, if you have things done, if you already gotten ready, right? The earlier the better, then the process, once you find that house and once you start that actual loan process, will be a lot easier for you. So here are some things that you can do on the next steps. And I talked about this last Tuesday as well. Pull your credit with FICO scores. See where you are. The higher your credit score, the better. Why? Because it opens you up to all of the mortgage lending options that are out there, right? Now, granted, if you just, 2 years out of bankruptcy, FHA, or some lender specific product is going to be your best bet or your only options. However, the higher your credit score, the more probability you have to be open up to additional products, right? So pull your credit reports, print them out, see what's your credit score and what else is on your credit that could prohibit you from getting a mortgage or that you need to tighten up on, just like I said earlier, paying down your credit card balances, right? So review your scores and the reports, print them out, highlight what could be a problem, from scores to information to collection accounts to, late payments to maxed out credit cards. Just highlight all of those things and then get to work on improving and learning how to use your credit effectively. You can schedule an appointment with me. If you have that stuff, we can talk about it and create a schedule. And the reason why, again, it doesn't have to be me, but the reason why I want you to talk to somebody is because you don't know guidelines, right? This is not what you do, right? You don't know guidelines. So you may think, I'm going to do this, right? Where you think it's going to help and it's not. Let's say you can only get an FHA loan, right? FHA guideline says, if you have collection accounts and collectively the total is $2,000 or more, they want you to pay them off. Well, if you wait until you're in that mortgage process, you're going to have to pay them off in that mortgage process. But if you know that, right? If you're not talking to someone who knows that before you even go to apply for a mortgage, you may say, you know what, I'm going to pay down all of these collection accounts. Well, if you got, let's say you had $2,200 in or $2,200 in collections, right? And it might be, a $1,700 collection account, or well, let's say a $1,200 collection account. Let's say a $800 collection account. What does that put you at? $2,000, and you had $2,200 or $2,300 in debt. If it was time, like if it was really, really close and we didn't have time to go through and try to get those collections removed, well, guess what? You may negotiate to just pay that smaller one off. Like, let's negotiate. I don't have all of this. Let's pay that to get the collective amount of collection accounts down below $2,000. And you don't worry about those other two because it didn't say you had to pay them all off. It only wanted you to pay them off. The guideline says if collectively you have more than 2,000. And that's why I say it's important for you to know going into it where you are and have fixed any of those problems ahead of time. So again, if not me, it's fine, but get with somebody who knows mortgage guidelines. And that's the thing. Someone may know credit repair or credit. They don't necessarily know mortgage guidelines. The reason why realtors and mortgage loan officers send me their people who don't qualify is because they know I know mortgage guidelines, right? Which means I don't need to work to get your credit to be A+ super clean and stellar. I just need to help you get to where you need to be to qualify. We can then keep doing the rest of the cleanup on the back end, but we need to get you to where you qualify, right? And so it doesn't have to be A1 squeaky clean. So again, if not me, somebody, but get with somebody who knows mortgage guidelines and knows credit and can tell you the things that you need to do to have the biggest impact. And if we're trying to fix items or pay things down, where will the least amount of money have the biggest impact, right? But whatever you do, don't keep doing the same thing. Don't try to figure it out yourself. Don't be in this same situation 6 months from now and you got to move in 8 months, right? Be proactive and do this thing. So if any of this has been helpful to you, please subscribe to my channel and be sure to turn notifications on. If you know someone who is looking for a house, turn them on to this. They may need this information, right? Don't be a gatekeeper of the information. Also, if you're in need of personal or business strategy, let's talk about it. Again, all of the consultation links are below in the description. And as I always say, give yourself some grace. You don't know what you don't know. And it's a lot out here when it comes to finances. It's a lot out here where it comes to buying a house. Give yourself some grace. Keep striving to your next level. You're not in competition with anybody else. You just want to be better than you were yesterday. So keep striving for your next level of elevation and never give up on you. Never, ever, ever give up on you. Invest in you. You are so worth it. And I promise you, it is the best investment that you will ever make. Thank you so much for joining me today, and I will see you next time. Thank you for watching. I appreciate your time. Be sure to join me for the private online Q&A immediately following. The link is in the description. And if you haven't done so already, please be sure to subscribe to my channel and turn notifications on so you never miss this opportunity. Thank you again, and I will see you on the other side.